Okay. Good evening. Thank you for attending this meeting of the Governance Committee on Tuesday, the 26th of July 2022. My name is Councillor Colin Sharples. I'm the Vice Chair of the Governance Committee and I'm standing in as Chair tonight for Councillor Ian Watkinson. Before we start this evening, I would just like to outline some housekeeping rules. There are no planned fire alarms, so if it does sound, please run. Oh, sorry, I'll change that. Please leave via the emergency exits. Can I request that all mobile phones are kept on silent or switched off? Thank you. I think we'll do introductions across the board today. So I'll start on my left and we'll go round.
Thank you, Chair. My name is Chris Moister. I'm the Director of Governance and the Council's Monitoring Officer.
Louise Mattinson. I'm the Director of Finance and the Council's Section 151 Officer.
I'm Steve Kenyon, Interim Deputy Director of Finance.
Tony Ferber, Principal Financial Accountant.
Matt Derrick, I'm the Audit Manager from Grant Thornton for the External Audit.
New Longton and Hutton East.
Councillor David Shaw for Howick and Priory.
Councillor Catherine's reference St Ambrose Wood.
Carol Asprey, Democratic Member Services, and I'm clerking for the committee this evening.
Thank you for that. Welcome, Steve. This is your first governance meeting. Welcome also to Matt in person. Thank you very much for attending. Members of the committee are attending in person here at the Civic Centre with officers and external auditors. Other members of council may be dialling into the meeting via Teams to observe and or participate in the meeting. Please note this meeting is recorded and live streamed live on YouTube. The web link for this can be found on the council's website. Members on Teams are asked to keep their microphone on mute and only unmute when they wish to speak. Could I remind members to unmute themselves once they've finished speaking to enable the meeting to proceed smoothly? Thank you. Are there any apologies?
Yes, Chair, I've had apologies from Councillor Ian Watkinson.
Thank you, Coral. Declarations of interest. If a committee member has a pecuniary interest, they are requested to leave the meeting completely. The member can rejoin the meeting following the completion of the item in question. Does anyone have any interest to declare? None. Thank you. Okay, so we'll go on to minutes of the last meeting. I have the minutes of the last meeting in front of me for approval. Are there any points of accuracy on the minutes? None? Yeah. Councillor Smith.
Just a point of clarification, if I may, Mr. Chairman, please. On page 7, it's on the draft annual governance statement. The third paragraph down, it says that we would be informed out of the meeting regarding the Ombudsman's investigation. I can't recall actually seeing any report come to us for that.
I certainly haven't, Chris.
Apologies, Chair. I will pick that up and I guarantee it will come out to you within the week.
Thanks, Chris. So if there are no other points of accuracy, can we propose the minutes for approval? Proposed by Councillor Margaret Smith. A seconder? Do we need a seconder? Yeah, seconded. And are we all in agreement? Okay with that? Okay, item 4. Audit Progress Report and Sector Update. And I'll invite Matt Derrick from Grant Thornton to present this item. Thank you, Matt.
Thank you. I'll just jump to page 14 in the pack, which is just our timetable. This report just summarises the position to date with the 21-22 audit. You recall in May we issued our detailed audit plan for the 21-22 financial statements audit, and we've I think today actually seen the draft statements are on the agenda today, and shortly we'll be preparing to kick off the year-end audit of those financial statements, starting that properly kind of mid-August. August. And that'll progress through towards the end of September, and we hope to report to the November Audit Committee with our audit findings report and opinion on the financial statements. We are looking to report earlier as well on the value for money opinion this year, and pull that back more in line with the accounts opinion. So again, aiming to report that to the Governance Committee in November as well. Also in the timetable here, we've just added on the housing benefit subsidy certification work for 21-22, which will be commencing kind of in early October time, with a planned completion date for December 22. And the department deadline for submitting that this year has been extended from the usual November to the 31st of January 23 once again. The rest of this pack just gives a bit of an update and insights into the sector from our sector team, and some useful information for the committee to consider. We're happy to take any questions. Thank you.
Thank you, Matt, for your report. We've got forward that to the committee now. And is anybody any questions for Matt? Councillor Ogilvie.
Chair. Yeah, it's just on page 13 regarding the meetings and the efforts to try and ensure a smooth and efficient audit. We know that there were some glitches last year that the auditors themselves pointed out that were difficult in terms of the evidence that was actually given to you in order to undertake the audit. So I just wondered if you could give us just a little bit of a briefing about what you've been chatting through with the finance people. And it does say that you're continuing to liaise to try to ensure an efficient audit. So I'm just wondering, are there any further issues that you've identified that have yet to be resolved? Thanks.
So I'll take the last point first. At the moment, there's no new issues as such with commencing with the audit, and we're well prepared to start that in the next couple of weeks. Draft accounts have been issued in the papers today, and we'll be requesting the necessary evidence to start that audit over the next couple of weeks. We'll look with a view to start that in mid-August, as I said. In terms of what we've done, we've worked with Tony and Louise's team. We came back in May now it was, that we and did a bit of a workshop session with the finance team to try and alleviate some of the issues we've had in terms of the quality of evidence that's provided to us for audit. And this is it was mainly to give a bit of an insight in terms of the key things that we look for in terms of documentation, and try and avoid some of the kind of back and forth between the auditors and the finance team. Some of the issues we're hoping will not reoccur. I mean, one of the main delays with the South Ribble audit last year was to do with the information, the delays in getting information from the external valuer, and that was largely due to unforeseen circumstances on the valuer's side, and hopefully that's not going to reoccur again. But we've been working closely with the finance team throughout to try and make it a bit more smoother process this year. Thank you.
Okay, thank you for that. I just got one further point, which I don't know, you may or may not be able to comment on it, but it's on page 16. And it's regarding this consultation about audit committees, and it says that there may be a requirement for audit committees to include at least one independent member. I just wondered if you had a view on what does an independent member mean, and where may those members come from within the community? As I say, it may not be your thing to answer.
Sure, I can come back with on the kind of status consultation and a bit more details and provide that to the committee. In terms of an independent member, it would normally be somebody external to the council to provide a different perspective and bring certain skills to the committee. But I can come back on that if you want more information.
Okay, thank you, Matt. Are there any other questions for Matt? Any questions for Matt from people not on committee? I don't see any, no. Okay, thank you. Thanks again, Matt. That one is just for noting. Moving on to item 5, Treasury Management Annual Report 2021-22 and Quarter 1 Monitoring. And I invite Steve, your debut, sir.
Thank you, Chair. Okay, so we bring 3 reports to members in respect to Treasury Management each year. We bring a budget report, a mid-year review, and then an end-of-year or outturn report. So this is the outturn report for the year 21-22. And it also includes an update for the first quarter of this financial year as well. Overall, in terms of Treasury Management, 21-22 mirrored what happened in 2021 in that we saw high levels of cash balances. And that was largely due to the amount of COVID funding that was flowing through the council. And we also saw challenges where we had low yield in terms of the interest rates that were available. The headline figures are set out in section 7 of the reports, but I will quickly run through them for you now. So on the investment side, our approach is always security first, then liquidity, and then yield. You know, it's public money, it's got to be put in a safe place. Liquidity, we need access to those funds when we need them. And yield is obviously good, but not at the expense of the first 2. So that's the approach we take. We did receive significant amounts in COVID funding during the year. Quite often those were at short notice as well. As the pandemic unfolded, new variants emerged. There were different strategies to deal with that, and we'd quite often get large sums of money at quite short notice. Equally, we had to distribute that money during the year as well, at short notice as well. What we saw was an average daily balance of 58 million. So that was actually up on last year where it was 50 million pounds. So there was more money, but less yield. We were only able to earn 0.15% compared to 0.36% last year. Also, the ability to invest with other local authorities was limited because they were in a similar cash-rich position. They didn't need our money. In cash terms, we got a return of 87,000 for the year, which compares to 177 last year, so quite down, as you can see. On the capital financing side, we had a capital programme of 7.8 million. That required financing of 1.3 million, which we were able to do internally without recourse to any external borrowing. Just looking briefly at the first quarter of this financial year now, interest rates are increasing. Forecasts suggest that they'll continue, possibly reaching 2.75% by December 2023. I stress that's only a forecast. It's from our Treasury advisors who are quite close to the markets, and they produce their forecasts from various sources. The average daily balance in the first quarter, slightly down now at 54 million. That's as much of the COVID funding is beginning to wash through the council. So the amount of money's gone down, but the yield's going up now with the increased interest rates. We're currently getting 0.54%, which has returned us 72,000 in 3 months. So compare that to 87,000 for the whole year. So things are looking up on the investment side. And obviously no external borrowing has been entered into. Just a final couple of points in terms of the safeguards and the thresholds within which we operate. So we have our prudential indicators and our counterparty limits. We've not breached any of those during the last year or the first quarter of this year. The next formal report the committee will receive will be the mid-year review, which will be around about November time. Obviously, if anything changes between now and then, you will hear about it. And finally, I'd just like to offer thanks to my colleague Tony and the team who've managed the Treasury management function over the last 12 months. And I'll happily take any questions and ask members to note the report. Thank you.
Thanks very much for that, Stephen. So, members of the committee, any questions for Steve? Oh, yes, Damien.
Yeah, thank you, Chair. It's just a question on, is my speaker on? Yep. So it's just a question about the investment funds. You mentioned that interest rates are on the way up. and they're probably likely to continue going up for the rest of this year. I've noticed the maturity date on some of the investments is imminent. 1st, 2nd, 25th and 30th of September. Sorry, 1st, 2nd, 25th of August and 20th September. So that's quite a few £1 million coming in. Who makes the decision to invest that? And would it be wise to put the money on call rather than tie it up for a year at lower rates where we could get higher rates towards the end of the year? And you mentioned possibly going up next year as well towards the end of the year. I think the general view in the markets is, you know, it might peak around 3% or slightly higher. You mentioned 2.75 there. So possibly, do we leave that on call, you know, rather than tie it up and maybe wait a bit longer before we invest it? Thank you.
I mean, first of all, Chair, in terms of who makes the decision, that is the Treasury management staff operating within the confines of the prudential indicators that we have in place. In terms of how we make that decision, it is very much dependent on the advice that we receive on a daily basis from our Treasury advisors and brokers. You know, any decision will be made based upon that advice. And as you can appreciate, that advice is constantly changing. So we just make a decision based on its own merits in light of the advice we get.
Is that link asset services to give that advice?
Yeah.
Okay.
Okay, thanks, Steve. Any other questions for Steve? Alan?
Yeah, it's just a couple of questions really around the capital expenditure figures and tables 1, 2 and 3. Firstly, can I just say I thought this was a very nicely and well set out report, and thank you for that, because I thought the messages that it conveys were very clear. Well, certainly clear to me anyway. One, I guess the first question is, I'm looking at table 1, and I guess the question is just a question of convention. I noticed that the variance is quoted against the revision rather than the original estimate. Why is that? Surely the variance should be from what the original figure was. So that's point 1. And then based on that, you said that the capital expenditure over the year was 7.8 million, and hence there was no borrowing requirement. However, had the original estimate for capital expenditure of 15.8 million actually been achieved, does that then mean that we were looking at potential borrowing of another £8 million to cover that? If you can just clarify that, please. Thank you.
Okay, thank you. In terms of the first question as to why we're quoting a variance between actual and revised estimate and not actual and original estimate, I suppose the issue with estimates is that they do constantly change, that they're constantly updated, and we're just making the comparison with the latest estimate.
Yes, but so what was the figure that was in the budget that was presented to council? Was it the 15 million figure? If it was, then for me, the variance should be from that figure that was put before council.
Yeah, I mean, the figure that was presented in the original budget report to council would have been column 1 of that table, the 21-22 estimates. But throughout the course of the year, we do bring budget monitoring reports and we do bring revised estimates. So they've all been through the process, if you like. In terms of that table, we're simply comparing the actual with the latest estimate that we have.
And just to speak on that, and obviously the capital programme is dynamic in its very nature as decisions are made at cabinet, at council, new schemes are added, schemes are finalised, some underspend, some overspend, and so we're always monitoring against the latest capital programme that council, cabinet have approved in the quarterly budget monitoring reports.
Does that help, Alan? Yep.
To a certain extent.
Just to pick up.
Sorry.
Chair, on the second question. Had the capital expenditure taken place at the original planned level? First of all, we need to bear in mind that a lot of that spend would have been underpinned by grants and other funding sources. It wouldn't all have been financed from borrowing. But had it happened at that level, yes, potentially there would have been an increased borrowing requirement, and we would look at how we service that borrowing requirement, whether we can afford to do it internally without having to go out to the market at the time.
Okay, thank you for that.
Thank you, Mr. Chairman. I'm on the same line. We've got an original estimate of £10 million, and it's come out at £5 million. So if 50% of the original hasn't gone forward, have we any explanation of those capital programmes that haven't actually gone forward?
I mean, there is a separate capital outturn report which has already been through to Cabinet, and that does outline variances between original planned and actual and reasons. More often than not, it's not a case of something not happening. It's just a case of a delay or slippage into future financial years. So there will be particular schemes within those figures that just haven't been possible to complete in the current year, and the schemes and the funding associated with them have moved into the next financial year.
Yes, I understand all that. But one of the bugbears of this committee has always been that the capital estimates that are put into the capital programme are always way, way behind when it actually comes to the completion. But 50% is actually quite a substantial amount below where you would normally expect things to be. But I'll leave it at that for now. And if I could just go down to table 2, please. We've got on the third line, grants and contributions, the original estimate being 1,420,000, and the revised is 4,494,000. What we've actually distributed is 2,396,000, so a variance of 2 million. Where is that at the moment? Is it put in reserves, or is it in a special account ready for distribution?
It's the latter. So there'll be an account for capital grants as yet unapplied. So it will be sitting there waiting to be applied.
That will be happening fairly soon, I take it.
When the scheme takes place, yeah.
Right, thank you.
Sorry, and the grants and contributions, I think as some of the schemes have developed, we've been more successful in attracting additional external funding, so more funding from Homes England, various other pots of money. So we may commit to a scheme, but if there is an opportunity then to attract external investment in, that's what that line, it would require less resources for the council to put in, because that would be offset by an additional increase in resources from elsewhere.
So some of these grants are from Homes England?
They can be for a variety of sources. That's just one example of the various places from whom give us grants towards our capital programmes. For example, another would be the decarbonisation works. Again, a lot of that was, the majority of that was money that was grant funding that we were given to undertake those works with little input from the council. So it can come from a variety of different places. It's about bidding for that.
I understand some of the grant funding that came for the decarbonisation was government money. Is that correct? There's quite a bit of this government money.
On some of the grants mainly do come from various departments within government. Yeah.
Okay. Any more questions for Steve on this item? None. Any questions from members not on committee? None. Okay, thank you very much for the report, Stephen. As this is to note, no vote is required. We can move on to item 6, the draft core financial statements. And I will invite Tony Ferber to deliver this one. Thank you.
Thank you, Chair. Well, what we have in front of the committee tonight, Chair, it's clearly not the full draft financial statements, but all of the core financial statements are there, together with the key supporting notes. I'm sure you'll recognise some of them as the ones that, if we do have the full statement in front of us, they're the ones that I will always be looking to highlight. So, I mean, continuing that theme, if we could just flick to page 52, we have the expenditure and funding analysis. And yes, this is the one that answers that key question. How much did we have at the start of the year? How much did we have at the end? So the answer this year is we have 24.4 million in our general revenue reserves, earmarked and general revenue reserves, and that is down by just under £2.5 million on the year. Now, if we then go to page 58, where we have the list of earmarked reserves, again, if you just glance quickly at that list, you will you'll see the main reasons for that movement. One is around about halfway down, capital funding reserve, because quite a lot of money has gone from that reserve, again, into funding the capital programme for the year. And then lower down, we have a movement of over £1 million on the next to last earmarked reserve, the Collection Fund Deficit Distribution Fund. And this is the one where we have had this issue with the extra business rates reliefs over the last 2 years. We have had less rates directly from business, less income directly from business rates, and more from Section 31 grants for the reliefs that have been granted. So this actually displaces money between years. So this is the reserve where we've taken all of that off to one side to keep things nice and smooth. So if you take those two together, there is the £2.5 million reduction in the reserves. And again, just looking at that total figure for earmarked reserves, 20,220,280,000, then at the time of the outturn report to Cabinet in June, that figure was reported as 16,538,000. And the difference, again, is entirely down to this movement between the general fund and this reserve that is just designed to smooth things out. So it affects nothing operationally. So everything in the outturn report remains as it said, but there is this extra money from the transfers across this reserve. And then the general fund reserve, again, steady at £4.1 million, giving us our 24.4. So from there, I think that perhaps one other thing just to mention on reserves, if we go to page 49 and the movement in reserve statement, and I will actually just cross-refer to the last item and Councillor Smith's question about where that grant money had gone. So if we look there in the movement in reserve statement, third column in, capital grants unapplied, you'll see there an extra 2.35 million going into that reserve during the year. So there it is in that one. The other thing I would like to highlight is that just if we look at the balance sheet, so page 50. We do have a significant movement against the net pension liability. Just under long-term liabilities, we have gone down from a net liability of £37.3 million to 28.7. Now, this is, it's for the usual reason. It is remeasurements of assets that have come through in the actuary's report. So whereas last year we swung quite heavily in one direction, this year we've swung quite heavily back. And one other thing to mention about this figure is we have still to incorporate a figure of £2 million, which members will recognise as the deficit in respect of leisure pensions, as that has come across to the council. I'm sure I'm sure everyone is well aware of that. So that will have to be added in. So that 28.718 will go up by that extra £2 million. One other thing that I must say, the report itself, moving away from the figures, the report is, as always, at this point in the process, it's very largely about the process, because there is nothing that requires approval tonight. This is simply the draft statement of accounts. But I have to put my hands up, seeing as it's about the process. Unfortunately, it says in there that the audit's to be completed by September. Sorry, Matt, I'm really not trying to rush you. It is supposed to say November. So yes, come November at the latest. I mean, we are aiming for earlier. Is that fair to say, Matt? Yep, we're aiming for earlier. September would be great. But the actual date by which it is required is November. And I think I'm happy to take any questions from there, Chair.
Thank you, Tony, for that. Excellent report. Draft report or otherwise, I'm convinced there'll be some questions from members. Any questions from members? Sorry? I'm always tempting fate. No questions at all? Thank you, Margaret. You didn't let me down.
I'd like to let Mr. Ferber go away without asking you at least one question. Page 48, which is the comprehensive income expenditure statement, cost of service, net expenditure 2021, 11,855. This financial year 21-22, we've got 18,968, which is an increase by my reckoning of about 7 million. Have we any general information as to why we are 7 million more? Presumably, you will correct me if I'm wrong, this is out of the amount that we have to collect out of the general rate to pay. This is our expenditure, not the capital, it's the revenue.
It's the revenue.
Sorry.
You are right, it is the revenue, but it is not the amount that we have to fund. That is where the expenditure and funding analysis comes in. So if we skip across to page 52 again, then there in the third column, there is the 18,968,000. But that does include a lot of, dare I call it, funny money, valuation movements. And it's principally going to be about valuation movements where, yes, for the purposes of accounting standards, we have to put it in as expenditure or income as it occurs. But for the purposes of how much has to be met from the council tax, it has to be taken out again. So in terms of real money, we are looking at net cost of service 12,071,000 against 11 million, against 11,005,000. Yeah, page 52.
Funny money is the 18 and the true expenditure is 12.
Yeah, the 18 includes the funny money. The funny money totals 6.897 million. That's the middle column.
Mm-hmm.
So one less the other, that's our 12.071.
And is most of that revaluations?
The bulk of that will be valuations, yes.
Thank you, Tony. Thank you for the question. Are there any other questions, Alan?
Thanks, Chair. First comment is just a flippant one. I'm wondering what the external auditor is thinking about our funny money.
I'm sure he's taken note.
The question I've got is on page 58, and it's about the city deal reserve 1.85 million. I just wonder what is the basis for that figure? My memory of the last time that City Deal came to council, there was a much higher potential financial risk associated with a City Deal. So I'm just wondering where does 1.85 come from? What's the basis for that being, shall we say, sufficient to meet the risk?
That's not one I can immediately answer, Chair. I would have to take that one away.
Okay, is that all right, Alan? We'll come back to you here. Thank you, Tony. Hey, yes, Mark, Damien.
Thank you, Chair. It's on page 50, looking at the balance sheet, the net asset figure is substantially higher, up from 32.3 to 47.2. Huge increase. I'm taking that's mainly down to the pension liability being readjusted, etc. Are we likely to see the net assets fall again, moving forward? It looks like a very healthy increase. I'm just wondering if it'll come down again, or are we expecting it to continue at that level?
I think, Chair, certainly on the pension liability, I would hesitate to make a prediction on that. We are quite used to a pattern where it will swing back and forth each year, and especially the full valuation exercise is for the next 3-year cycle is now underway. So yes, that's even more fundamental than the usual annual exercise, but that doesn't in itself mean that it's more prone to large swings. It is more in depth, but really, Chair, I would not like to try and make a prediction on that one.
Yeah, I was trying to examine it in more detail, but I noticed a lot of the notes aren't there. As you said, it's not a full report. So I mean, if the notes were there, it would have been interesting to look at the notes to see where the figures came from. But I suppose we'll get that opportunity later when the full report's done.
Yeah, that will be very soon. I think the one thing that I've forgotten to stress was that we are on the brink of a full draft statement now. So within days, I will dare to say that within days, we will have the full draft statement, and that will be published onto the council's website. And yes, specifically, I can assure you, councillor, that note 37, which is the one with all the detail that you're looking for in, that is prepared.
Thank you, Tony. Any other questions for Tony? Any questions for Tony from members not on committee? None? Okay. In that case, as this is to note, no vote is required, and we'll move on to item 7, the SIPFA Resilience Index. Steve, since you did so very well on your debut report, you can do this if you don't mind.
Thank you, Chair. Okay, So this report outlines a piece of work that's been done using the SIPFA Resilience Index, SIPFA being one of the main accounting bodies in the public sector. The purpose is to provide an assurance of the financial health of an organisation by taking a number of key indicators and comparing them with a comparator group. Now, SIPFA come up with the comparator groups each year. They look at social, demographic, economic factors across the country and basically parcel people up with like authorities. You'll see from the report that has changed between the 2 years that we've looked at. Some people have come in and some have moved out of the group. So it is constantly reviewed. The information that SIPFA use is picked up from the various statutory returns that councils have to do through the year, and SIPFA just pull it together into this index. So I suppose the first point is that it does come with a health warning, because we do know that there are inconsistencies across the country about how councils complete those returns. So you always have to bear in mind, are we comparing apples with pears, basically? That said, there's still benefit from this exercise. Certainly by comparing different years, we can look at our own performance and our direction of travel from one year to the next. Also, it's perhaps fortunate that Chorley is in the same comparator group, because the figures are produced by a shared finance team. So we know that at least those two are comparable. So given those health warnings, it's still a worthwhile exercise. I'll quickly run through now what the indicators are telling us. So in terms of reserves sustainability, the council's showing a very strong position. Basically, what the figures do, they're scaled back to a mark out of 100, and this council scores 100. So it can't get any better in terms of reserve sustainability. In terms of the level of reserves, the cash level, once again, the council's performing strongly there. It's got around about 160% of its annual spend held in reserves. So that is a high figure, 58th best in the country, and the third place in Lancashire districts, behind Wyre and Ribble Valley for information. There's a graph showing the change in reserves between one year and the next. Not unsurprising, really. Most councils have seen their reserves go up as they've held on to the COVID monies that we talked about in the previous report. Looking at interest payable, that is very low for South Ribble, as you'd expect, because there's no long-term debt, just day-to-day cash flow as and when required. That said, back to the previous point about slippage on the capital programme as well. If the capital programme, or when the capital programme does pick up ahead of steam, some of that will potentially be funded by borrowing, so the interest charge will go up in these indexes. The same argument in terms of debt. Likewise, debt at the moment is quite minimal, but if the capital programme does require funding from external sources, obviously that will go up as well. And we do know there's schemes on the horizon in terms of leisure, extra care schemes, that kind of thing. So they are going to require funding one way or another. And I suppose the only thing to say there is that for any scheme, it will be judged on its own merits, and a decision will be made what's best in terms of funding that scheme. The fees and charges towards the lower end on this graph, and that's possibly indicative of the fact that we haven't had that level of investment historically. But again, if the leisure schemes and Jubilee Gardens goes ahead, well, they will generate income and we'll see us move up this scale. Council tax, what we're comparing here isn't the cash council tax charge, it's the overall yield, the total sum the council gets in. And what we're seeing there is a healthy council tax base in South Ribble. And finally, business rates growth. The council's actually showing top of the group there. It's had some very strong growth in 2021. 2 new supermarkets, work on an enterprise park, and also some additional work at a hospital have all generated additional business rates for the council, which have fed through into those figures. that's an important factor because business rates are big numbers in terms of setting our budget. And what we're looking to do within the finance team is step up the monitoring of this. We want to be more finger on the pulse, really, in terms of what new developments are coming on stream, when are they coming on stream, what business rates might they generate, so we can factor that into our forward forecasts for budget setting, etc. Couple of final points. I suppose the so what test of all this, well, it does give us an independent assurance that the council is in a strong place financially. What we need to do is keep refreshing these reports, keep rerunning the exercise, and then we'll build more and more of a weight of evidence, and we'll be able to see trends, etc. And finally, obviously glad colleagues from external audit are here today, because we will be sharing this information with them to support their value for money judgment that they'll be doing in respect to the council. I'll take any questions. Thank you.
Thank you, Steve. Wow, that's a good news story, isn't it? You need to join these meetings more often. And I'm sure Matt is impressed as well. Any questions from members? Alan?
Thanks. It's more just a comment rather than a question on page 72, the gross external debt. The comment at the bottom kind of tends to suggest that we should be getting ourselves into more debt in order to get some income. But at the end of the day, this is only a comparator. It's not actually saying whether the situation is good or bad. And some people would obviously say that the lower your debt, that's the better your position. So it's, as I say, just a comment, not a question.
Thank you, Alan. Any questions? Margaret, yeah?
It was just on the business rate growth baseline, which we're at the top of the league, as you said. Could you just go through, you mentioned Tesco here. I think you mentioned 2 supermarkets.
Yeah. Gotcha. So there was a new Tesco at Penwitham. There was also a new Aldi in Leyland that came on stream in 2021. There's been work at Buckshaw Hospital, which has increased business rates, and also a number of new or developed units at Lancashire Enterprise Park as well, which have added to the business rates yield.
When you said hospital, it didn't automatically take my mind to Buckshaw.
Right.
Thank you. Any further questions? Yes, Damien.
Yeah, it's just a general comment. It's good to see that the council's finances are currently strong, but I just wonder how that will appear in a year or two's time. With, well, like you said, all this extra debt that's going to come on board, combined with the higher interest rates, etc. So maybe we'll see those charts move slightly the other way. I suppose as a council we need to be careful we don't overborrow, and I don't think it's particularly a good thing to compare ourselves with other councils that are in a weaker position and aiming to get towards the weaker position. I think we should be aiming to remain strong. Thank you.
I suppose, Chair, all I'd say to that is that any investment decision is made on its own merits, and with a robust business case, risk assessment, and everything that goes with it. Debt in itself is not a bad thing. As long as it can be financed and generate income, and any decision would be based on its own merits and taken through the appropriate channels as well.
Thank you, Steve. Are there any other questions for Steve? Any questions for people not on committee? Yes, Councillor Phil Smith.
Thank you, Chair. And this is again with regard to business rate and the calculation, the way it's calculated. We obviously have a very large business rate reserve. So we'll be looking at, well, on that increase in business rate, are we looking at the actual gross income, if you like, from there, rather than net income, which is put into reserve because of financial the challenges with regard to business rates. We know that there's an awful lot pending, and we do have a good reserve for that. But so I think it's just where that figure's come from, really, and whether it is just a gross income from that. Thank you.
Thank you, Chair. Yeah, that will be the gross figure that features it in these figures. But it's a fair point, actually. Whilst I've outlined that we're stepping up our monitoring of business rates growth, we need to follow that through with, so where does that growth go?
Yeah, with every growth in business rate, there's obviously a risk as well. So thank you.
Thank you, Phil. Thank you, Steve. No further questions? Again, this is just a note, so no vote required. And we move on to item 8, Strategic Risk Register. And I'll invite Chris Moyster to deliver this one.
Thank you, Chair. Yes, the members have before you a report dealing with an update to the Strategic Risk Register. Members who were on the committee in February will recall having seen the Strategic Risk Register presented to you for information, which outlined the risks for 22-23. This report is intended to provide some assurance that, as stated at that time, that the Strategic Risk Register is a living document. It's a document that we review regularly and update. If I can take you please to paragraph 18 on page 80. There are 3 risks that have been updated at the last review. On 3 of the risks, R1, R2 and R8, there have been a reduction in the inherent and mitigated risk level. But for 2 of them, which are risks R6 and R16, there's actually been an increase in the risk score. And the table that follows on at page 82, which contains the full risk register, includes all the comments that were made, or the comments that were made about our approach to risk at the senior management team, who the body that owns the Strategic Risk Register. I think the content of the report really speaks for itself, and I'm happy to take any questions on it, Chair. But it is there for information. It's to provide that level of assurance that risk is something we continually manage.
Thank you, Chris. Do we have any questions from the committee for Chris? Alan?
Thanks, Chair. Yeah. Just in relation to risk 7 about ICT and security, it mentions earlier on in the report about cyber security, but when you look at the detail in this report, there's virtually nothing in there to do with cyber security other than a few warm words. I wonder if we could get something a bit more positive. Equally on 06 about staff recruitment, there's lots of nice warm words about reviewing this and developing that, but there's no actual concrete actions that are actually being taken to basically improve the offer to encourage people to come and work for us in South Ribble.
Yeah, okay. If I can deal with the second point first, which is around retention of staff and making us a good place to work. We've actually just launched a people strategy internally, which is about developing out the existing offer for staff. And selling us as a place to work. We already know we're a good place to work. It's getting that message over. The challenges around staff retention and staff recruitment are more to do with the state of the market at the moment. There are, shall we say, greater financial opportunities elsewhere. Now we have, as a council, a quite developed salary structure, which obviously is job evaluated and developed in accordance with the council policies and processes and in consultation with the union. So it's very difficult to depart from that to ensure that we get fairness across different parts of the council. So what we're looking at is the fringe offer, if you like, so that staff feel valued and are given development opportunities, so that even if we can't offer them opportunities to progress internally, they're developed in a way and they're given opportunities to do work that gives them a chance to apply for something elsewhere. So whilst it sounds daft that we've got a strategy that we're actually trying to retain people by putting them in a position to apply for other roles, we're hoping that the variety of work and the challenges they do and the reward that they get from that will actually motivate them to want to stay rather than to look for alternative employment. And there's some evidence of success with that. But it also means we get a good opportunity to grow our own. So we are looking at developing out through the apprentice factory and through apprenticeships and graduate trainee roles, the opportunity to actually take staff on. I don't want to say teach them the South Ribble way, but kind of bring them into the culture that we're developing here and give and make them enjoy it. You know, get them to work in a way that we know is productive and will serve them well moving forward. So I take your point that it's perhaps a little bit thin on some of the detail we're doing, and similarly with the ICT detail. If I'm reluctant to suggest that we get the director of ICT in to give a presentation to you all on some of the shakes of head on some of the actions that are being taken around cyber security. But there's some pretty fundamental work that's been undertaken, particularly around the back office systems and particularly around the servers and the internet security that has been implemented, which actually moves us quite a long way along that journey very, very quickly. So whilst it is thin on a lot of detail, some of the big steps that we've taken have actually moved us on in that way. And the other reference to moving the ICT risk, it's taken it out of the broader risk to the full council, but it's actually moved. We've tried to centralise all the ICT risks into that one risk area of R7, which is another reason why that's moved out of one risk and into the other. I'm not sure I've answered all your question there, but does that give you some comfort?
Yes, it does. Although, yes, I'm not looking for a presentation from the Director of ICT, but I think it would be useful, certainly personally, I would like to see some sort of key bullet points as to what you're actually doing. What does it mean that we're looking at cyber security? Because, you know, we've all heard of large organisations being hacked and difficulties, NHS, banks and all the rest of it. So we're just a little council. You know, are we as strong as we need to be in terms of defending ourselves against that kind of attack?
Yeah. Chair. One of the things that we will be doing, an internal audit, I don't know if it's on the next plan, but it will be on the plan thereafter. It is, well, it's not internal audit. We arrange for external body to come and do penetration testing of the council system, so that we get that external assurance concerning the robustness of our cyber security, particularly from hacking, you know, the kind of things that you've suggested there. But we've not done it recently because we were aware of the issues already and we knew what needed to be put right. What we need to do is, when we're satisfied we're at the right point, is then getting that testing done to make sure the work we've done has done what we wanted it to.
Okay with that, David.
Sorry, on the IT thing, the reason I was shaking my head was not that I think members shouldn't know what their role is and how they can better fulfill things like GDPR responsibilities, but when you start getting into the security of the systems, we need to know that there's a potential risk and that something's being done for it. But the last thing I would want is to publish exactly what we're doing to try and combat any risks. Good point, well made. I think what I would be looking, the information I think that Councillor Ogilvie is looking for is just the bullet points of the actions, not necessarily the detail of those actions, but enough that you as a committee are provided with assurance that we are aware of the issue and are taking action in the appropriate areas to deal with it, perhaps not the specifics. You're not having my password.
Thank you, David.
Yes,
David.
I'm quite sure I wouldn't understand the detail.
David.
There you go. So page 82, strategic partnerships. The risk has reduced. I just wonder if you could explain, give some explanation into why the risk has reduced, because this comment says to reflect that the risk of delivering objectives through partnership has reduced as the leisure and waste services have been insourced. I mean, if my first thought is when you go from one system to the next and you've got an established system and you go to an unknown system, in my mind, that increases the risk because it's an unknown. You don't know what it's going to be. So I just wonder if you can explain the reason why it's reduced rather than going the other way. Thank you.
Yeah, it's because the risk you're looking at there, the strategic partnerships risk, the two elements of that were the partnership with FCC and with Serco, and they're not in existence anymore because we've actually insourced those services that are being delivered by the council. So this risk has gone down as a result. We have managed the risk in relation to the delivery of those services, and that'll be actually it's in the risk above R1, which is service delivery. So it has gone down because that was around, we reduced it because of COVID has waned, although it seems to be coming back, but the impact of COVID on service delivery has reduced, so we were able to reduce that risk. But the way we've actually managed the risks in relation to the insourcing of those two projects has meant that it's not impacted, or at least the view of SMT is that it hasn't impacted. And I think that is supported by the delivery. So the bin service has continued on, and I think most of the public wouldn't necessarily know that it had changed from FCC to the council. And the leisure centres, whilst there have been some issues, they've largely been externally driven rather than through the management of the leisure centres. So things like power cuts, which, you know, are something beyond the council control. So that's why the strategic risk register has changed. Those risks are contained elsewhere to do with the directorate or service-led registers, but this is owned at a higher level, and this is the one which you think the governance committee should be more concerned with.
Okay. Yeah. Thank you. Yes, Margaret?
Thank you. We've discussed R06, which is the staff and capability and skills, and obviously that has gone up. And we know the reasons why. We've got a lack of staff, people are actually getting to the stage where they must be doing extra work to cover for the vacancies that we've got. And then we go down to RA10, which is staff morale and satisfaction. And I'm not going to go over what we went over at shared services about the staff satisfaction, because we hammered that one fairly well. But what does concern me, when you turn over onto page 86, which is part of the staff morale and satisfaction, it says increase in sickness absences. Now that to me must, between the two, between the morale and the lack of capacity and resilience that we obviously are now facing, there is obviously going to be some problem there. Some years ago, we used to have the sickness figures quarterly. I thought it might be helpful if we actually could have those figures just to monitor whether they are going up or down, because it is, I think, a factor within these figures at R10 and R6.
Is that possible?
I can certainly take that away. I'm not sure reporting quarterly, but we do report on it internally. But yeah, I'm sure we can bring something back to members on that. Just one thing I just want to be absolutely clear on, that the risk register identifies risk looking forward as based on the. I don't want members to get the impression that we currently have capacity or capability issues internally. It's the risk of that arising, given the additional works that are coming online. The major projects is one of the areas. So if we've got some key members of staff who, if they are off for any purpose, for any reason, or decide to leave, that increases the level of risk to the council if those projects are in train. But I do take your point in relation to the staff morale point. It's been discussed. I think the staff morale on it, it's about where, given COVID, you'd expect it. And I do say that genuinely. I think there's a lot of external factors that people tie into their employment that aren't necessarily just around the work. But that's not to say we're not conscious of it and trying to do things to improve the environment for staff.
I understand all that, and I understand we're looking forward, but nevertheless, sometimes a little bit of historical information regarding things like this, and then we can look to the future and see how it is actually panning out, and whether that indicator is going to go up, down, or sideways will help us, I think. Well, it will help me. Let's put it that way. Thank you.
Thank you, Margaret. Are there any other questions or comments on this item from members? Alan?
Thanks, Chair. It's just a very quick comment on page 89. Climate change and air quality says the work noted in this report does not impact the climate change and sustainability targets of the council, basically. Personally, I think I would quite like to see some kind of risk in the risk register relating to climate change and success of or not success of climate change. It's just a comment, that's all.
Yeah, thank you for that. It is helpful to get an idea as to what members see as the risks, the strategic risk for the organisation as well, you know, outside SMT. So, yeah, I'll take that away. It is something that obviously is being managed. It will be reported on increasingly now we've adopted the strategy documents that went before council. We'll have something to measure against and so on. So, yes, we can certainly look to do some reporting on that.
Thank you, Chris. No further questions? Any questions from members not on committee? I see none. In that case, again, as this is to note, no vote is required, we can move on. So, final item, Centre for Governance and Public Scrutiny Review. And I will invite Chris again to present this item.
Thank you, Chair, and apologies to members. It's me again. The background to this bit of work, and I think a few members were involved in being interviewed by the Centre for Governance and Public Scrutiny in connection with this review, but it comes out of two pieces of work that the council have done. One is the annual governance statement from last year, not this year's, and the action plan, and also the peer review that took place. So we're in this process of looking to improve constantly. And one of the things to do that is to get independent views on not only the way we do things, but things that we have changed to see whether there've been any improvements as a result, and to get that independent assessment and check as to where we are. So the purpose of this was really to have a review of our constitution and our governance, the decision-making arrangements. And you'll see from the body of the report, it was broken up into to 4 sections, and the report actually it's a letter, but it starts on page 109. And this was generated after review with different officers from the council and also members of committees and the group leaders. And what we asked them to look at was the impact on changes to the constitution that were implemented a couple of years ago, the roles of members and relationships across the chamber and with each other, with members. And obviously this came out of not only bits of work we've been doing internally, but observations by internal audit in last year's value for money assessment. The executive decision-making, accountability and scrutiny, because we'd made changes to the processes that had been implemented, that we used for executive decision-making, and also public involvement in meetings. And I will accept that the last one was something that I asked them to look at. So Lisa Smart and Ian Parry from the Centre for Governance and Public Scrutiny undertook this review, and I think Lisa led on most of the interviews. And the content of their review is in page 111 onwards, and they've made a number of recommendations. So firstly, in relation to the impact of changes into the constitution, they've asked that we refresh the scheme of delegation, because I think it was flagged up by some members that there was a lack of clarity as to which director was responsible for what and what they had delegations to deliver. And that's a piece of work that we were doing anyway, and hopefully I'll be presenting that to full council in September with that update. There's then the comments in relation to member roles and relationships. There's 3 recommendations. Training for chairs, which is not an unexpected recommendation that comes out of this type of review. It's often the case that the independent people who come in say you just need a bit more training in this area. There's also a suggestion around the political groups seeking outside support in preparing for future administration and or opposition. I'll add that on to the end of that statement. And that's something that we would look to do anyway, should the need arise. But again, it's not a surprising recommendation to see. And then the final recommendation was about political groups approaching relationships in a consensual and constructive way, building for the future rather than revisiting the past. And that's something that's come out of, I know, having spoken with Lisa, but her reviews of some of the council meetings that she saw either online or the YouTube feeds that are connected to our internet pages. In relation to the executive decision-making accountability, there's a few recommendations again. A clearer focus on democratic accountability. Scrutiny of cabinet members should form a key part of the work plan. I'll come on to that in a second, sorry. Some of these recommendations I don't disagree with, but I think they just need a bit of refinement, which is why we'll come on to how we move this report forward shortly. But I think there is a need to have a look at the role of scrutiny committee and try and get that refocused, and that's supported by the following recommendation, which is to revisit the protocol in place for both scrutiny committee and governance committee to make sure that members are clear as to the role of those committees, particularly new members. And that and this is one that is a criticism of my team, but I take it. But the process of agenda management and reports be assessed so that members are getting reports in a timely fashion. And I know that's something that's been highlighted by members over the past 12 months, if not longer, about receiving. I can see Councillor Phil Smith smiling there, it's something that's right to highlight because these are big decisions you're being asked to make, and you need to have the information in a timely way to make those decisions. So again, that's something that I will take on board, and we will revisit that process. And then in relation to public involvement, there's a recommendation about just reordering the order of speaking. There's nothing wrong with what the council are doing in relation to public engagement, but perhaps bringing that public engagement forward to enable members of the committees of council to actually reflect on what the public have said, because there's a moment it comes at the end, which is pretty much after everyone's had the chance to speak. So I think there's some logic to that. So what the Centre for Governance and Public Scrutiny have actually recommended is that they have a workshop, and you will see from the report that there is a list of members, being the Leader of the Council and Deputy, Leader of the Opposition and Deputy, Leader of the Lib Debs and the Mayor. And I'm sure you can see why we've included the Mayor rather than the Deputy. Sorry, David. But it's just to enable members to feed into those recommendations but also to get some additional background information from the centre who prepared the report. If you've got any questions as to some of the ideas behind or the reasoning behind the recommendations, it's the opportunity to test those. Now, the recommendations will be owned by the council. So again, I think it's very important that members have a role in either adopting or developing those recommendations. And the suggestion is when that workshop has taken place, that the outputs will be worked up into a report that will be presented to full council. So this whole report and the recommendations that the members have agreed will then be presented for adoption and implementation. So I do think that the report is a good read. I think on the whole it's quite positive as to the way that Salisbury will, in fact, not just on the whole, I think it is very positive about how Salisbury will undertake their business now. There's always things that we can do to improve, and I think it's given us some direction in that. And I'm happy to take questions on the report.
Thank you, Chris, for the report. David.
Thank you, Chair. Thank you, Chris. seem to want to ask if they were guided as to which council or other meetings they might want to look at, but maybe you won't want to tell me, or whether they just had free rein and just picked their own. Can I've spent some time on our planning committee, and I've seen some of the other committees about the place. I've not got a full range of the council, but I do strongly agree with the idea that there is no point in having a public participation unless it's before the decision starts to be made. And I think if we can, certainly in planning, there's a clear place early in the process before any decisions are made by the committee, before the committee fully decide things. I fully support that.
Yep. I won't say that they were specifically guided to what meetings to review, but they did have access to all council meetings. I think that some issues were highlighted in the conversations that were had directly, but equally, again, I'll refer back to the external audit review that contains comment concerning the conduct of meetings at governance committee in the past, and it does. So they were documents that were shared with the centre. So it could be that they picked up their own cues as to what to look at, but they weren't specifically referred to any particular meeting by me. They asked where some meetings could be found, and I told them, but I didn't specifically steer them in any direction. I don't know if anybody else did.
Any further questions from members of the committee? Damien first.
We recommend that the joint protocol for governance and scrutiny be refreshed to improve clarity and efficiency. And I'm just wondering what is planned. Is anything planned to do anything about refreshing?
Well, this is part of the process. So there is a recommendation within the body of the report to do that. So the suggestion is that we have a workshop to review those recommendations with it'll be I think it'll be Ian Parry from the centre, and it will be an opportunity for the members of the workshop to say, what do you actually mean by that? And for them to then agree what the appropriate actions will be. And I think the purpose of that paragraph there is to try and ensure that committees aren't, well, it's about duplication, which I think is the point they're making. And when it's appropriate to test something at scrutiny committee, for example, or whether it's appropriate to be raising it actually at executive cabinet, so you're not doing it twice. And that's just an example. I can't give you any specifics of that, but that's where there could be a potential overlap. Okay.
Alan.
Yeah, thanks, Chair. Just to clarify in my own head, so basically the recommendations for this are basically that we note this report and agree for it to go to a workshop and then eventually for it to go to full council. I think that's the basic thrust of it. I've got a couple of other comments, one positive and one negative, I have to say, and it's page 112, member roles and relationships. I did find the opening paragraph extremely welcome, that we stop harping on about the past and consider the future. However, the bit that really concerned me was the paragraph just above the "we recommend." It goes on to say that concern about role of committee chairs. To illustrate this point, specific reference was made regarding a discussion at a recent governance committee, which was allowed to venture considerably outside the responsibilities of the committee. I think it's only fair that for members of this committee, before that workshop takes place, that we are given the information as to which committee meeting are they referring to, which discussion are they referring to, and what are the issues of a perceived venturing outside the remit of the committee are, because certainly when I've been here for the last few years, I haven't seen anything that's ventured out of the role of this committee.
I can quite happily go back to the centre and ask for further detail on that to share with you. The reason I brought this to Governance Committee was because it is a report that deals with outputs from the annual governance statement and matters that have been before you before. So I did think it was very important that this committee saw it before it was just taken straight to council. So I'm glad that you were happy to see it. Yeah, I'll happily get that information for you. It was meant to be a step back review. I think that's clear from the introduction to it. So it wasn't going. It has to give some reasoning for the recommendations, and I don't think it was ever intended to go into any massive detail or even for it to be interpreted as criticism of different bodies. I don't think that was the intention of it. I think it was just meant to be, this is our view, and this is what you can do with it if you're happy to accept that view. Now, even if you don't accept that view, you can still do something with the recommendations, because if you view them as potential improvements, and I think revisiting a protocol is always a worthwhile exercise, then yeah, but I'll happily go back and try and get that information.
Thank you. Margaret?
Thank you. I find the report very interesting, having been part of the interviews that took place. And certainly some of the things that came out of that interview, I can see within the body of the report. And I do welcome some of the comments that are made in here. One, Alan has referred to about the repeated tone of some interaction between members can be terse and hostile, and yet they found no evidence of that. It says it may still exist. However, during the meeting's observations, the tone behaviour was not especially notable, and behaviour did not go beyond what might be considered the normal push and shove of political debate. And I think that's a good thing, because I do think we have had this almost paranoia in recent times, and that we are all getting at each other all the time, and I don't think that's a good thing at all. And I think I have spoken to you about it on a number of occasions, as you know, and this idea, this constant harping back, has not been good for this council in any way at all, and I'm glad that it is referenced in this report. I'm interested in what will come out of this refresh of the governance and scrutiny. I do have serious concerns, as you know, about the role of scrutiny and the way it operates, and certainly of the Budget and Performance Panel, which I have also mentioned. I think it is too narrow, and that would be something I would like to see looked at and see if it can be really put back where I think it should be, which is within the whole of the Scrutiny Committee, so that they have all the information that they require to actually look at the finances and the budget arrangements of the council, and therefore they can take the scrutiny of it further and they can become the critical friend it should be. That's just my view of it, and I'm not saying it's the right one, I'm just saying that's my view of it. But I do think that on whole, there could have been a lot more in it. I realise that, because I understand the interviews went on at considerable length, and Lisa was very good about allowing people to overrun their time. So from that point of view, I think the report is welcome. As I say, I'd be interested to hear where some of the findings have actually emanated from, and it'll be interesting to see what the workshop brings out. Thank you.
I think the word workshop comes to mind, and you would agree? The workshop will cover most of that, will it not? Yeah. Sorry, any further questions? Committee? Any questions or comments from members not on committee? None? In that case, the committee, I'll read this out, the committee are asked to receive the recommendations and findings in the report and note the further presentation to members through a workshop facilitated by Centre for Governance and Public Scrutiny. That the membership of the workshops be the Leader of the Council, Deputy Leader of the Council, Leader of the Opposition, Deputy Leader of the Opposition, and Leader of the Liberal Democrats, and the Mayor. That it is agreed that following the workshop, it is intended a report to be taken to full council to review and approve the recommendations, actions and proposed responses for further implementation. And we are required to vote for this one. A show of hands would be sufficient, would it? All those in favour? I think that's unanimous. I should ask for a proposal first. I do. How's our proposal? Can you just a second? Thank you. I got away with it, yeah. That completes the meeting. I'd just like, before we close, to ask if we consider one item that a member's mentioned earlier. Some of the data and figures in these reports, as it's put to me, just go over your head. It really is quite complex. And I was wondering if we can look at, perhaps as a committee, how we can present some of this information such that it's presented in maybe in this form, but also has added to it something in real layman's terms to help explain some of the parts of it, if that makes sense. I wonder if that's possible. It might be a workshop or something like that.
I think it does make sense, Chair. I think the way we tend to approach it, though, is you will get a detailed briefing before the final version is presented for approval, and I think that was undertaken last year by Louise. Sorry, I'm stepping on your toes here, aren't I, Louise? But go on.
No, with regards to the statement of accounts, obviously they will be brought forward for approval from the committee, but before that, we will, prior to the meeting, we will have a session where we run through them with the assistance of Tony and go through and the notes, and it will be any questions, and we can talk through to use it more as a training session and an explanatory session at the same time. But if there is any questions at all, as Tony mentioned, they're going to be published on the website shortly, and they will have all the notes. So if I know there are about 150 pages of them, but if there are any questions and you want to pass them over to us, then we're more than happy to reply to them as they arise, rather than waiting for the one meeting. So.
Thank you.
And I do think, actually, as well, that within the pack there is a glossary of terms.
There is, yes, just right at the very end is the glossary. But yes, as I'm sure members know, I'm always delighted to answer questions on detail of the accounts.
Alan.
Yeah, just on Colin's point, I mean, my understanding of it always has been is that we as committee members are not accountants. We are not expected to understand all the detail of what's in these reports, but we are expected to understand the general thrust of the figures put before us. So I don't know whether that helps you or not. Sure.
Thanks, Alan.
And I would say that they just keep getting more and more complex, and every time there is a review to simplify them and to make them more readable by the user, they just get more complicated. And, you think all through the year we're bringing quarterly reports and we're saying this is what we forecast the overspend and the underspend to be. This is the capital programme. This is how it's funded. And we work through that, and we're in a regular format. And all of those numbers are always blown out the water by having to introduce the impact of the pension liability, which are numbers that are created by the actuary based on, potential yields on bonds and gilts and, longevity. And you're like, where is the overspend or underspend that you referred to in the monitoring return? So it's... We have many accountants working on producing these, and each with their own, specialist. Tony's our technical specialist, and so yeah, very difficult.
Okay.
The thing that I always think would be the simplest way of helping the general public understand these figures is to stop putting brackets around the things that you wouldn't normally do, and put brackets around things that you're going to lose money on, and leave the brackets alone for the one where your income comes in, because that's the way normal accounting works. but not for SIFTA. They have to have it the other way around. And I'm sure it confuses people all the time. And I have made this plea so many times, but I know SIFTA have a better idea than I have as to why it should be done the way it is.
Yes, thank you, Margaret. Right, any other comments before we close? I'd just like to say thank you to the officers for... Sorry, did you want to say something? Go on.
I think it was last year, I can't remember, it was last year, the year before, we had brackets around a negative, which made it a double negative, apparently. So it was wonderful. And I can't wait for 50 pages of Glossary of Terms. Wonderful.
Thank you, Phil. Okay, thank you, the officers, for attending and for your excellent reports. Thank you, Matt, for joining us, especially in person. Nice to see you. And thanks, members, for your contributions. And with that, I close the meeting. Well, thank you.